Dear investors, as we close 2025, let's be candid. It has been a challenging year for the Indian stock markets. We have navigated a period of relative underperformance, sharp currency depreciation, and sustained FPI outflows. However, beneath the surface, a structural transition appears to be underway. While the INR saw a sharp adjustment, we believe this may support India Inc. to sharpen its edge. A more competitive currency is supporting our export-oriented businesses in the face of higher duties in key markets, from textiles to electronics, and making domestic manufacturing more attractive versus expensive imports. Yes, foreign outflows were heavy in 2025, but the tide appears to be turning gradually as the cost of capital falls in the West and our currency stabilizes at these new levels. We are seeing indications of FPI activity move from selling to selective buying. So why am I optimistic about 2026? Because the macroeconomic stars are beginning to align. First, growth appears resilient. Despite global headwinds, India's GDP growth has remained resilient over 7%, driven by manufacturing and services. Second, cost of capital is dropping. The RBI has initiated a rate cut cycle, which historically supported economic activity and growth investing. And third, energy costs are in our favor, with crude prices weakening despite global sanctions. India stands to save billions in import bills, directly supporting fiscal health. Most importantly, valuations have corrected. While the markets have stayed in a range, earnings have continued to grow. This has created a significant valuation reset, making Indian equities relatively more appealing. Now, in some high growth spaces, we have seen a valuation correction of over 30%. The froth appears to have reduced. Value seems to be coming back to the markets. Now, our portfolios are positioned to capture this recovery. We aren't just following the index, we are investing where the earnings are. We have high conviction exposure to the new India themes, such as defense, renewables, electric vehicles, capital markets, and NBFCs. History teaches us that markets eventually follow earnings, whether it was the software boom of the 90s or the banking surge of the 2000s. The winner are always simple businesses with sustainable growth. We have chosen to partner with leaders in these spaces, companies with the fire in the belly to participate in long-term growth. While our approach may differ from the index, it is intentionally structured to participate in the earnings growth opportunities over the long term. Summing up, 2025 was a year of consolidation. As we move into 2026, market conditions appear more balanced, with improved valuations, lower interest rates, and emerging sectors like circular economy gaining pace. The probability of a favorable period ahead is high. We enter the new year with clarity, conviction, and a renewed focus on growth. Thank you for your continued trust. On behalf of everyone at Motilal Oswal, I wish you a very happy new year. Happy investing. May the good times continue.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.